Welcome to Ask the Accountant, the podcast that is made for you. Weekly podcast live Mondays from 8:30 a.m., released on the podcast service of your choice on Wednesdays. Your main weekly hosts, Aaron, Patrick, and Johann. Got something to ask? Submit your questions below or ask during the show. Podcast loading. We are currently getting everything set up behind the scenes, so sit back, relax, and we will be with you in a few seconds. Enjoy.
Good morning, everybody, and welcome to Ask the Accountant. You see, Aaron, that's how you intro it and get it right. Ask the expert, I mean. Good morning and welcome to the show. It is 8:30 on Monday morning. Aaron and myself are here to chat all things accounting world. Aaron, how are you? How was your week and your weekend?
Yes, very good, thank you. Very good. It's been an early one this morning. Got up at 4 for a 5:30 train. Get myself into London for a big few 3 days. Seeing you tomorrow. Got a guest coming through as well for Ask the Accountant's very first ever episode of We Have Cool Friends. So very much looking forward to that. What about yourself? Good weekend? Enjoy it?
Weekend was very relaxed and got better once we saw 1-2 finish by the Silver Arrows in the F1. I was very happy with that.
Yeah.
Very good weekend. Thank you very much. And yeah, just plenty of meetings today to get the diary cleared so I can be in London tomorrow. Busy week ahead. So yeah, as you say, meeting with you, Aaron, for our first episode of Ask the Accountant. We Have Cool Friends to be recorded with our first ever guest. So this episode will not go out live. It will be recorded, edited. I won't go as far as saying professionally, but it will be edited and produced.
Full-blown produced this will be, I'm telling you. Fancy logos and all.
And then it will go out on the podcast and as a YouTube video, I believe, at a later date. But we're very excited to have the guests that we've got. They are probably not someone anyone would expect you and me to have as our first guest, which I think adds to it. Very excited for that to be recorded tomorrow night in a fantastic location. We can give that bit away, can't we?
We can. I've been looking forward to utilising this space for a long time. So if anyone's a fan of their, I suppose they're not even craft beers anymore, are they? They've kind of gone past that now. But if they are kind of that craft-est beer, then yeah, it's good old Brewdog has come to the rescue and created this nice little podcast studio. But then again, I'm sat in hours in the middle of London now for Ask the Accountant podcast studio in London, and we could have made it done here. It would have been all right. Just maybe a few beers was a little bit more appealing, should we say?
I was just going to say, do you have beers? Do you have burgers? And do you have chips? So
this is it.
So yeah. So we're looking forward to recording our first ever Ask the Accountant with Cool Friends in the Brewdog podcast studio in London tomorrow night. And then I'm at the small business show for the 2 days after that. I'm there with the QuickBooks team, helping answer questions from small business owners. They call it small business show, but there's about 30,000 participants meant to go through over 2 days. So it's going to be really busy. It's going to be phenomenal, that.
Is that more or less than Accountex, you say? What do you think?
I think it's nearly twice as big as Accountex.
Twice as big? I knew it was more, but
sure, Accountex is like 15,000 over 2 days.
Okay.
So yeah, I'm sat here looking at my business cards thinking I've not got enough.
It's nice to see that for once there'll be an expert on the actual QuickBooks stand. I mean, I'm not saying anything. I'm just saying it'd be nice to have an expert there that can...
I think so. It's interesting. QuickBooks has never done a small business event like this. Neither has Sage, Xero, Iris, or anyone like that. But Sage and QuickBooks are both at this one. So I think it's really nice that QuickBooks have gone, right, we're going to go and sell direct to the customer, to the small businesses, but we're going to bring in someone that is an accountant and runs an accounting firm to answer questions to prove that the accountant is still at the heart of the software, which is a marketing message perhaps they've not got right over the last few years, but they've been internally, I know they've been discussing it quite a bit as to how they can get this right. So I think this is a really nice positive step in the right direction for accountants to be seen as part of the ecosystem that comes with a QuickBooks software license.
I spent the last 2 days, well, I say last 2 days, I've lost 2 days of the weekend, but last 2 of my working days at QuickBooks HQ. And obviously, there's a lot I can't say, NDAs, everything else, but definitely what you've just said there about accountants being the heart of it, that is definitely the move they're going for now, which was great to see. And we got that right from the very top. So, yeah, it's going to be, I think it's definitely an interesting viewpoint that we need to keep our eye on, make sure they are complete with that. Even something as simple as the TV adverts, we know we're going for a bit of a rehaul at the moment, aren't we, to try and get away from that stigma, shall we say, of what was the terrible adverts that we've had recently. So yeah, it should be good though. It should be. I think you're right. I think that change and everything else should be something to keep an eye on, and definitely a future topic, I think, for how it's going to help us going forward.
Yeah, definitely. Yeah, it's interesting, isn't it? Like, there's a lot of movement in what softwares are doing at the moment for PR. So Iris have recruited a couple of fantastic accountants to become employees of theirs to help push their marketing and stuff forwards. Sage seems to be all over social media at the moment and giving away a lot of rugby tickets at Twickenham, which I'm not envious about at all. I got invited the other day, well, a couple of weeks ago, to go and watch the Scotland game with my father-in-law. And after checking that I couldn't claim it for a charitable allowance, I decided to let my wife go instead. But yeah, like Sage are like giving away lots of Twickenham tickets at the moment, and and it's not just a ticket; it's an experience they're giving to those accountants. QuickBooks are obviously doing a lot of stuff at the moment. Xero are out doing a lot of partner lunches in local areas and stuff. So yeah, there's lots going on, and I think there's certainly been that turn in the tide of COVID is gone. We are back out. We are promoting to accountants to try and get them on board again, which is nice because we've not had that for a couple of years with COVID and everything. So it's nice to be back to where it was and some money being spent on these things. So, but yeah, so let's have a look. What's going on this week, apart from the fact that we are recording Ask the Accountant with cool friends, which is very exciting. And the fact that we're both in London and we're just all over the place at the moment. We also need to sit and plan Accounting Web Live at the end of this. That's in 2 weeks' time now, which is really exciting. Looking forward to that conference as well. Is there anything else happening this week, Aaron?
I think that's what is happening this week. I think you've got it right. It's weird, isn't it, how we're coming towards the busiest part of the season, yet we seem to be doing more non-accounting stuff than ever before. I don't know where the timing's quite right on that one. But yeah, no, I think you're right. The fact that we've got Accounting Web, hopefully that's the end of the silly season, and then we can actually start getting back on with just client work and getting things done with there. But yeah, I think it's going to be crazy onto there. We didn't have any feedback from last week. I will put that one in there now just to kind of drum it up for the week after. Remember, if you do have any feedback, we'll whack it in the comment section now so you can put some in. But remember to keep us honest if there's anything we kind of missed out on, or if there's anything else you think we should have mentioned before or anything like that, then do make sure that you utilize the feedback section and let us know so that we can make sure everyone's up to date with anything we may have not quite got right. So yeah, dropping that into the comments section now.
Brilliant. Thank you very much, Aaron. Right. Well, as soon as there's nothing much going on in the software world in the form of announcements, and we've got a few conferences coming up and stuff, but we can't really talk about what we're going to do yet because that's all a bit hush hush. Let's have a gossip. Let's have a bit of a gossip and play fantasy budgets. So everyone loves playing with fantasy football, apparently. So let's have a chat about fantasy budgets. So on Thursday, whilst I'm stood on the QuickBooks stand talking to small businesses, the Chancellor is going to be announcing his autumn statement budget. So I might have one headphone in, just trying to listen to that at the same time and try and keep up, because I'm sure I'm going to get questions on it straight away. But yeah, so they carted him out over the weekend, didn't they? And he did all his press conferences and stuff. Overall message was taxes are going to go up, spending cuts are going to be made, but we'll try and look after those that need it the most. So there's that aspect to talk about, and we've already covered, I think, last week that capital gains might be getting hit and dividends might be getting hit. But there's an ongoing rumour, a rumbling on the jungle vine that MTD ITSA might be getting delayed again. Now, this is going to be there's two schools of thought. It'll either be announced during Jeremy Hunt's statement on the 17th, or if that's a bit low key and not overly exciting, he doesn't want the press to pick up on it necessarily, then he will drop out a bit of a statement on the Friday, the 18th, I believe. The budget, yes, there's bits we need to pay attention to as accounting firm owners, as business owners, as individual taxpayers. But I think the MTD ITSA bit could be the biggest bit of news for accounting firms. I know we've got a lot of planned things going on where MTD ITSA is the anchor of those timescales. So it could be a pain in the backside for us, because this was meant to happen originally in April 2023. It's now looking at 24. Could it get delayed even further? Who knows? I've been asking around. I've been chatting with people at QuickBooks and stuff. No one's heard anything, but then I don't think anyone will hear anything until the government want them to know about it. It's very much internal. I don't think they're going to consult on this. They're just going to say, this is what we're doing. Aaron, what have you heard about MTD ITSA? Anything?
Well, the rumours I've heard is that it might be more of a staged approach, and they might just, almost certainly it looks like they're going to delay the rental side of things, which seems like, again, we spoke about either on here or it was on QuickBooks Labs. But the idea there that really would be the element where I think they would get the most amount of joy out of, in terms of possibly under-declaring or people not being 100% on the ball with it. Does shock me that that's the one they're going for. But then again, looking through kind of some of the technical aspects that they still don't understand, from joint ownership all the way to how they're going to deal with having even multiple properties under one person sort of idea, you can kind of see why that would be the one they need to delay. And there was some choice questions that was been brought up at some of the latest MTD seminars and webinars that HMRC almost look backed by as of, well, we haven't really considered that, or we're not really sure how to answer that. We're going to come back to you. So I think it's almost certain that something's going delayed. My preference would be that it would just be a part of it, like rental or something, and at least we get a staged approach, because at least then, as accountants, that's going to be much better for us to actually prepare and get ready for. Because if I look at my kind of preparation in our firm, then really MTD ITSA for sole traders is a very small proportion of what our business is going to be. So getting ready for them wouldn't be a massive amount of changes. There's obviously going to be accounting firms out there that they live and die off MTD, of sole traders, and they're going to be massively affected. I'm taking a wild guess here, but I can imagine Portal over at Chariot Accountants would be quite heavily affected by that, based on what we can assume his clientele is going to be. But if we can at least get that rental side of things coming through, I think that's, or at least delayed, and I think that will be a massive save in terms of it. And again, from our point of view, we can start understanding how the MTD ITSA is going to flow and what's it going to be, what sort of stuff we've got to get ready for our clients and everything else. So possibly that could be a good news from a selfish accounting point of view. But I do feel sorry for the likes of Hammock and the likes of the other software solutions who are massively putting together an MTD ITSA based software. So We'll see. We'll see. I think it's going to be delayed, isn't it? If we think about it and we look at what's happened and where people are, I think personally, though, the sooner they get it out there, the better for everyone.
Yeah, no, I completely agree. I think the longer they drag it out, the less genuine their case for it. But yeah, I was chatting to Andy Wainwright over at Wainwright's the other day, and big fan of the show, and he was saying MTD is going to be a nightmare for them at the moment. They need to find ways of becoming more productive and efficient to be able to deliver it, and they need to make sure the software stack they've got is in line for this. So yeah, and your best mate, Andy, isn't he now?
Apparently so. Apparently, you do a bit of help for him, and friends for life by the sounds of it. But no, I think it is. I think it's for people this is where it's going to be a massive culture shock, isn't it, for accounting firms like Andy's, where they've been able to kind of talk and win the clients on based on giving them a solution that is really cost effective, and that's what really helps bring their clients in. And now they've got to find a way to still maintain that cost effective approach, but by delivering a much more complex solution and service to them, isn't it?
Yeah.
And it's going to be it's less about the firms having to adapt. It's more about trying to make sure the clients can adapt and understand the value and understand the part of it all. I know we've certainly taken the approach that we'll do a 3-tiered approach for all our clients. It's either we'll do it all for you, you do it, we check it, or you do it, and then we'll just make sure it's been submitted sort of solution for you. And putting it as simple as that makes it more a lot more easier to put together a solution that you can roll out and make sure it's got some growth behind it. But for someone like Andy and them lot, they're going to have to really think about even more complex solutions for their clients because they have such a bigger base of clients they're going to have to look at, aren't they? And you're right, it's going to be a lot of it is going to be pressure on making sure software can help them. They've got an advantage that they're very, the client engager is going to be able to help them with a lot of this by the time that it rolls out, where I think more so than your software providers in terms of the one that's going to press the button to actually submit this MTD, it's in whatever form it's finally going to come out at. I think the most important thing is finding that right software that's going to help deliver automations for you and deliver solutions that are going to make it so you don't have to constantly be chasing clients and constantly looking after clients and constantly holding their hand. And I think what this has got a good opportunity for is those things like client engager and software like that, to find a niche that or a solution that becomes absolutely important to every single client out there. I know already that if my current CRM solution was taken away from me, our practice would just fall apart at the knees. We are so reliant these days on the automation and the way that it sets up and the way that we have it all set up. Without it, we wouldn't be able to grow the way we are. So yeah, we become highly dependent on it. But I think what this will do is this will give you an opportunity as a firm to really look at those opportunities and see that basically without them, your firm's going to really struggle, and there's not going to be an opportunity for you to deliver a service to the clients, the same service you're delivering at the same price point, without any form of automation. So if you're going to be trying to look at ways in which to just maybe increase fees slightly, or try and find ways to make it so that you can be as fair to clients as you possibly can be based on their current level of service to what they would need in MTD, then this is the opportunity to use software to really help achieve that, I think.
Definitely. You're right. It's going to be about planning and organisation, and yeah, whether we are planning for 2024 or a later date, or part of 2024 and part of 2025 with different clients, the sooner we know, the better. And the sooner they stop changing it, the better, because they keep delaying lots of plans. And for people like Hammock, who are, their business model is based on this concept of MTD, it's for landlords. That's where they're going to start making their real money. I mean, they're doing well as it is, but the floodgates open when MTD goes live for the landlords. So for them, they need to be able to plan ahead and have a business plan in place for this. So the constant changing dates is not going to be helping them or any software building out opportunities for landlords, as it were. So yeah, and how are your bounty bars? I am not bitter at all.
I think I've just about got enough now to fill every celebration box there is that comes through the door. So yeah, no matter what happens, we'll always have bounties. Well, bountiful amount of bounties, really. I think is the way you put it, isn't it? So yeah, I mean, you are missing out. If anyone out there is concerned about this whole travesty that celebrations are about to lose bounties, then now's the time to stock up. And yeah, and speak to Andy if you want to know where to get the best amount of bounties for you bang your book, by the sounds of it, because he's got a monopoly on the bounty world, so it's great.
Brilliant. But yeah, I'm not jealous that you got chocolate bars sent to you and I didn't at all.
It's the best way, isn't it? It's the best way to keep your friends. So, yeah, and let's kind of, we've talked about MTD Itza and the delay of it, but let's think about what else could possibly announce. Or if you had a magic wand, what would you want to be seen announced at the budget that's coming up? So what would your fancy picks be?
I don't know if it's as much a fantasy as it is what do I expect. I'm not an economist. I don't know what makes the economy turn, really. It sounds like a very dry, dull subject at the best of times to me. But what am I expecting on Thursday? I'm expecting tax thresholds for income tax to be frozen. And why that? Because that means more people fall into the tax brackets sooner, which means more tax. I don't think I'm expecting a tax rate increase. Certainly not for the lower and lower rate. Based on the approach that Rishi Sunak had as a chancellor during COVID, I think it's a very safe bet to expect dividend thresholds to be reduced and dividends tax to be increased. He's not a fan of people paying themselves through dividends at all. So yeah, I imagine that's going to be reduced and increased tax rates and reduced tax-free allowance on that. I don't know what he's going to do with capital gains. It'll probably increase, but I kind of feel sorry for landlords out there at the moment. They're in a sticky situation, especially in Scotland, where their interest rates are going up. Which means their mortgages are going up because most landlords have their mortgages at interest only. But then in Scotland, they're not allowed to increase their rates, their rents at the moment. But then, so you think, right, time to get out the market. But if the capital gains rate goes up in April, like it's rumored to go up, then everyone's going to try and get out of the market now, which means it drives prices of property down. So you're not making the profits that you were. So yeah, a bit of a catch-22 for landlords there. But if the market's become flooded with properties because of it, then first-time buyers, etc., will be buying a cheaper property, which is never a bad thing necessarily. So yeah, it's and I think we're just going to see lots of spending cuts in different departments and different projects delayed, not necessarily scrapped, but delayed. I know the Scottish, Welsh and Northern Ireland governments are screaming out for more money. Literally, there's ambulance strikes happening in Scotland at the end of this month because of pay issues, and the Scottish government just haven't got any more money to increase wages with, or so they tell us. They might need to reprioritise where they're spending some money, but never mind. So yeah, I think in this one, he's going to be damned if he does, damned if he doesn't. But hopefully the markets are going to react better. Like we all saw what happened when Liz Truss decided to slash all the tax rates, which was for us individuals as taxpayers, that's great news. We're going to pay less tax. But the banks and the markets did not appreciate or want that. They didn't like the stability issues and the fact that we're just going to increase our debt without getting any more, without clearing and reducing it. So, yeah, I would imagine his budget's not going to be hugely publicly friendly, but it would hopefully lead to a more stable marketplace, and we'd start seeing a reduction in bank interest rates and stuff. So yeah, what about you, Aaron? What are your thoughts? Have you got any top tips for him on the hotline that you've got to Rishi Sunak? Have you been telling him what he should do?
Yeah, so the phone's just off the hook at the moment. No, I think for me, the biggest issue is that we kind of already know what's coming, which is one of the reasons why I'm almost bored of talking about it in the nicest possible way. It's set in stone in terms of the corporation tax increase and the fact that that's going to affect us in terms of businesses who have group companies and have more than one companies, and those sort of aspects we kind of prepared for. We've had time to at least talk to clients and have an opportunity to bring that in. I think you're right. There will be a attack on capital gains. My fear, and again, if we're looking at fantasy and we're looking at, being completely out there, my fear would be if he takes on the whole idea that you get your 30 days or 90 days, whatever it is, to get your capital gains tax in, and he starts bringing that to all capital gains, not just property. That's at some point there's going to be some sort of real-time connection to that. Let's hope that never comes to fruition, because that sounds like an absolute nightmare. And that could be something that could really cause us issues with people who have shares and stocks and buying and selling businesses and items like that. If you only got X amount of days to be able to get that in, it's not just your year end. And I can fear that would be a very aggressive way of being able to do that capital gains. I suppose the argument there is that, technically you've just had the cash, so let's get rid of the tax burden at the same time. The cynical of people out there, kind of, well, that's what HMRC will push for as their, positive of it all. But at the same time, it is very, very, very complicated for people who are stuck in that mindset of they need to wait till the end until to worry about capital gains. I know a lot of people have been stung already by the property changes that came into place. What was it, 2 years ago, a year and a half ago, however long it was. So I can really see that would be a problematic approach if they went down that one. So let's hope he's not listening to that, because that would really cause us issues. And if we really look at the fantasy, and let's try and think of ways in which we can be a bit positive about it. The only thing I'd love to find a solution for is just small businesses who just hit that 85k threshold and then struggle and then really, really find it difficult to kind of continue. We're one of the luckiest countries out there to have that 85k threshold. It's not guaranteed everywhere in the world. It is a really good thing for us to encourage small businesses to find their feet, to get up to scratch. And some businesses will never hit that, and they never have to worry about VAT for the whole of their existence. But I do think if we've got a fantasy element to it, we've got an opportunity to do some good, then is there an opportunity to have some sort of stage approach for it somehow? Is it 85 to 100? There's a different percentage that either you charge or you have to pay over on, even if you still charge at the 20%. I would just love to see some sort of support for business at that point, because more than ever at the moment, with the increase of costs that we're having, like that idea of hitting that threshold is such a fear factor for small businesses at the moment when they're first starting out. And as accountants, we try to put a positive spin on it. We try and explain to clients that, this is going to give you more credibility. It's going to give you the opportunity to, save money on taking on claiming VAT on your import and everything else. But the normal way of looking at it is if a client doesn't absolutely smash through that £85,000 threshold, then most of the time they're worse off than they were if they stayed at the 70,000. And, those sort of numbers don't seem to add up. So it'd be lovely if we did have a fantasy, budget, and we were able to wave a magic wand if we could support those small businesses in some way. So that's what my kind of outlandish one would be. It's never going to happen. We've got cuts coming. We know that. But if we could have some support back to small businesses, that would be absolutely brilliant.
Yeah, I think the VAT threshold is becoming more and more pertinent of a conversation, because you can't deliver half as much work as you used to be able to and stay under that threshold anymore because prices have gone up. It's a conversation we're having with clients quite often at the moment is, look, for the last few years, you've always been around the 60, 70K mark for turnover, and that's great. But now your prices have gone up because your costs have gone up. You're hovering dangerously close to VAT registration. You need to make a decision, because then if the prices go up any more, you're going to cross it without actually doing any extra work. So yeah, it's an interesting one, isn't it? And as much as I value the fact that small businesses have the chance to get up and running without the administration burden of VAT from day one, I do think it's less painful to cross that threshold if it was at £10,000 a year and just get on with it and be VAT registered than if it was at 85,000 and you've got to, people are limiting their growth of their business. If everyone was automatically registered after 10,000, how would you stop your business growing at 85, or would you keep going? So yeah, it's going to be a challenge, and it's going to become a bigger and bigger discussion point, I think, for the government to look at. Especially, they're not required to have to report back to the EU or anyone anymore about their threshold rates and get permissions to change them or anything. So it is fair game as a topic of conversation now. It is in their hands, as it were.
I think this is where the idea of truly making tax digital world, the utopia of the world, where that idea that you send an invoice out and that invoice is automatically recorded in the other business's software would give us more flexibility around VAT, wouldn't it? At the moment, we've got to keep, although it's vastly complicated and there are bits on there that is stupidly complex for a typical client to grasp. But if it was a case that as long as your VAT that you send out was correctly charged, then we could have different percentages. We could have stage approach from 10,000 all the way up to 85 if we wanted to, couldn't we? If we knew that whatever was sent out was going to be correctly recorded on the other side. Because I can see now, like, the fear in bookkeepers' eyes of the idea that was another VAT rate which was introduced. The 12.5% and the 5% and all that lot was bad enough for them, wasn't it? They found it very, very difficult to kind of maintain with clients, and there was a lot of kind of discussions around how to keep the records as clean as possible. Yeah,
I mean, the other option there is that you say all businesses register over, 10K VAT. Now, if all businesses over 10K turnover have to register for VAT, you could drop the VAT rate and maintain the VAT income to the government at the same time. So that makes things more affordable in theory. But also, do you then bring in what we see with PAYE of a small employer's relief? So regardless of, everyone registers over 10,000, you do your VAT returns, you all pay your normal 20%, so your flat rate scheme, whatever you're on. But all businesses get under like a certain size, get X amount of small business relief, VAT relief. And that's just a credit automatically applied to your VAT account by HMRC in the same way the small employers' national insurance £5,000 a year is applied. Maybe that is a more simpler solution for them.
Yeah, now we've got MTD VAT as standard and there's no other option for it, then that gives you that opportunity to bring it in, doesn't it? There is now that flexibility, and softwares can help us by making use of APIs and everything else that HMRC are giving us. Yep. We could automatically have that apply without clients even have to think about it anymore. If they're eligible for it, it goes on and job's done, which is very, very similar to how it works now with PAYE, like you were saying, isn't it? And that's thanks to software kind of making it usable.
Yeah, definitely. So yeah, definitely options out there to make VAT less of a burden for us and for small businesses, more importantly, because as Paul's just said in the comments, 85K has always been an issue for sole traders and they stopped growing because of it. Like, how much damage is that limit doing to our economy? How much more would businesses grow if they didn't feel they were facing a huge tax burden after crossing that line? So yeah, definitely something for the government to look at. And if they want to pay me to consult them on the concept of small employers relief, I am available.
and your rates are pretty reasonable, I heard. Was it £2.8 million? And you'll have a sit down with them?
Or a box of Mars bars.
Box of Mars bars, okay. Right, okay.
And a small cactus.
We definitely need to work between us on our negotiation skills, I think. We've got more cactuses now than we can shake a stick at. So
between cactuses and chocolate bars, we're happy.
We're content, very content.
Yeah, very good. Any other thoughts on Thursday's budget?
Again, I'm bored's the wrong word, but I am, it's got to that point now where I just want it to be over so we can talk about what happens, what that impact's going to be.
Yeah. Clearly
next week, that will be the topic that we'll bring up, or we'll be able to talk about it, and, watch this space as well for social content on it, because, both of us will be having to put content out there for our clients to understand. And I think, unlike last time, where I'll always remember the last mini budget, and I was actually coming to London as well, and that's being in this room kind of reminds me of it all. The message I put out to the group of like fellow accountants and fellow everyone is, what tone do we put? Like you said, it was great for us as individually because taxes were coming down. But in the back of my mind, it didn't fit right. That didn't sit right. It's like, well, there was a reason that we were having these taxes increase and everything else. So let's hope that we get a bit of stability, and whatever gets thrown at us, it's an opportunity for us to find ways in which we can help our clients, and that's all we ask for, isn't it?
Yeah, definitely. Right. So next subject. So as you do on a weekend, you spend it on social media, and over the last couple of weeks, I've been spending more and more time in accounting and bookkeeping groups on Facebook and stuff like that, reading questions and comments. And I'm starting to worry for the industry, because I know people like yourself and myself, Aaron, we are early adopters. We are at the forefront of tech. We are constantly beta testing things, whether it's new softwares or just new features in current softwares. So we're very much up there with what's going on and how it's happening and stuff. But then I kind of felt the back end of that bell curve thing that they give out in the marketing world of early adopters, more, and then the back end people. I kind of felt that was further ahead than perhaps it actually is. So just to put some context into this, there's lots of questions at the moment, like how do you speed up document processing, like putting receipts into software, like your bookkeeping software. What's everyone using to speed up writing out letters of engagement? I'm just sat there thinking, we solved this 5 years ago. How big a gap is there between the early adopters and the back end of that bell curve where the rest of the industry kind of catches up? Because I didn't realize it was more than 5 years, put it that way.
Yeah.
So someone asking about how to process receipts quickly and efficiently, and everyone's like, well, there's Dex, there's HubDoc, there's auto entry, there's loads of them out there. And it was quite revolutionary to quite a few people on that chain of comments that there was this automated process you could use. And the same for letter of engagement. People are still having, by the sounds of it, they've still got Word documents that they're editing manually every time they send out a new client letter of engagement. And they're still asking clients to go to the post office to verify their ID and stuff like that. I'm thinking, well, we know there've been tools out there to automate and streamline that for the last 5 years, at least. So I think it came to me this weekend that the gap between us and the back end of the industry, well, not even the back end, maybe the middle part of this bell curve, if that's more than 5 years, then the industry could get into trouble quite quickly. So that was my observation over the weekend on social media. What are your thoughts?
Well, I think one of the things is that it's no surprise to me. I mean, I've been banging my head with this industry for a long, long time in terms of just progression. We are in a really privileged position, as you've already said, how we're early adopters, and we take the risk of that as well. It sounds great being an early adopter, but also we have the warts and all that comes with it. So, we do have, much more of a troubled time in terms of, keeping clients happy sometimes because a service isn't working that it should do, or whatever the issues are going to be. But the industry as a whole has been one of the slowest to, change and adapt that out there in terms of what's, industries within UK itself. When I first started, it was actually quite revolutionary to use Excel as a working document. It was all done on paper, and the reason you did it on paper is because you can get a tick and you can put a red tick on it and cross the tick through, and that was to say that was been done, and that number had been added up correctly. And we couldn't move from paper to Excel because we wouldn't be able to replicate that tick. Bear in mind that now, obviously the whole point of Excel is it adds it up for you, but that was never going to be the case. And I'll always also remember, kicking and screaming at people who in the industry that I worked with who weren't even using Excel to add up cells. It was a case they still had their calculator and they still wanted to add things up because they didn't trust it. So the industry has been kicking and screaming into going into a different solution. So it doesn't surprise me that there's this massive lag, and it doesn't surprise me that it's going to take a long time for the industry to come back to where we are. And at that point, we would have moved on tenfold as well. And I think that gap is only going to get bigger and bigger. What does scare me, though, is that there seems to be kind of a twofold with it. You've obviously got your, people in the industry who are kicking and screaming and do not want to go through the change. They're happy with how they've always done it. And ultimately for them, they're either going to go out of business at some point, unfortunately, adapt, hopefully, is what's going to happen, or they're just going to get acquired by a company who does have that opportunity to modernize it. And unfortunately, the writing's on the wall with them. But I also feel like there's another subsection as well of adopters, of people who are utilizing the software, who have become over-reliant on it and aren't actually looking at it in the way they should be. Letter of engagement being a great point of context. A lot of people out there who are just ticking the box in the software, they've got letter of engagement and never really looking at it from their own point of view and from their own practice. Or, again, you said anti-money laundering or the ID verification. Again, they're ticking a box in the software to say let's do ID verification and think that's the only bit of AML or anti-money laundering checks they have to do. There has been that over-reliance, so we've got to try and find the right gap between the two of them. But I do think it's going to be something that going forward is going to be, the gap's going to get bigger and bigger. Even as far as we're talking about receipt deck or receipt capture, anything else. When we first started looking at that solution for our clients from day one, we noticed that having the email address provided by Dext or auto entry or anything for our clients to utilize was going to cause us problems, because we knew from day one that will make it very sticky and that will keep clients using whatever software it is they're using. If it's so-and-so at dex.com, we can't then start using that for auto entry if we decide to move to them, for example. So we, from day one, decided that we would provide that email address and would forward it on using clever bit of technology to move it to whatever we want. And we almost created a tap, and we could turn that tap to whatever software solution we wanted to use going forward. And I just assumed that was going to be adopted for every accounting practice in the world. But even things like that never got adopted, never taken it on. And now people who have had that over-reliance on Dex or receipt capture or auto entry or anything else are now struggling to find ways to be able to move away from them to go forward. So I think we're in that real awkward stage at the moment where a lot of clients or a lot of people that a lot of practices that we're kind of talking to and seeing at Accountex and places like that are slowly but surely starting to see the light. But I do think that for a lot of those, their firm is going to be kicking and screaming to make any changes. And it's that culture shock that I think is going to be the biggest and hardest way for people to actually make any impact on it.
Yeah, no, definitely. And yeah, I just worry that it's going to continue to plague an industry that we've got every opportunity to be seen as a tech embracing, automation embracing, modern industry. And the majority of us are holding us back because they aren't looking at stuff like this. And yeah, if we want to attract the best talent out of schools and universities into the industry, it needs to be seen as a modern, vibrant place to work and where new revelations and technologies are coming in. And if they aren't seeing that image from us, then they're not going to be interested in working in the industry. It's not in line with the brand that they want to have of their own personal self. So yeah, it's scary, and it'd be quite interesting to see if we can put a timescale to that bell curve of early adopters versus, we'd take it once everyone else has done it. Because I always assumed it was 2 to 3 years. I never ever thought it was over 5 years.
It's got to be at least 5 years. Because I remember I did a lot of training, or still do a lot of training for QuickBooks in terms of going into practice and showing what the QuickBooks can do and doing their pro advisors in practice and seeing what's happening. And some of the kind of old schooliness that I thought was gone is still around and still it will be there. Paul's mentioned here about that negativity and lack of confidence in HMRC from accounting firms. It will be HMRC that will push these firms to at least adopt some form of technology or some form of software, and hopefully that will be the gateway into them seeing what's coming out and what other solutions can be available. But that does make me kind of worry about why, or understand more why there's been such a problem regarding MTD ITSA. Because again, from our point of view, yes, we've got to do new processes, and yes, we've got to do a new fee structure, and yes, we've got to adopt some more automation, and we've got to kind of do things. But ultimately, they're tweaks, and they're just tweaks to services we're already doing. Ultimately, for some practices out there, they're going to have to completely rethink the way they deliver their services from every single aspect of it. And I suppose that's where that fear factor comes from. And that's where, me saying, yes, it's only going to get bigger. I suppose the only thing that can prevent it getting bigger is something like MTD ITSA, making people kick and scream to adopt some form of technology, isn't it? Yeah,
definitely. Who'd have thought it? HMRC helping the accounting industry embrace modern tech.
Yeah.
Who'd have thought they would have been the catalyst? Yeah. We got a question in a bit earlier on from someone on YouTube called AA. So, Aaron, question and answer time. This gentleman or lady, someone has brought some stock, £70,000 worth, in their personal name prior to starting a limited company bank account. How do I now account for that and sell it to my business, as there's money coming in but no records of costs? Go for it.
Go for it. Awesome. Do we get 30 seconds? No, I'm joking.
No,
Countdown clock starts here. No. Basically, from this point of view, and from anyone who is starting a limited company, one of the things to remember is that there is a aspect to it that you'll be kind of not familiar with, which is called your director's loan account. And just think of your director's loan account of you having any form of income or expenditure that's outside of your typical bank account. And this example here of you having to buy stock in or bring in stock in, well, that's going to form part of it. So the fact that you've got stock that you are going to go from one entity, which was your sole trader, into your new entity, your limited company, you're going to want to utilize your director's loan account to account for it. Now, just be a little bit careful. There's a stock there of £70,000. So there's a potential there could be VAT issue here. So do make sure that if you are already VAT registered in your sole trader and your limited company isn't quite VAT registered yet, make sure both of those are, or if there's a transfer of going concern, make sure it's being pulled up with that one. So I would just advise from a VAT point of view, just really think about that one. But ultimately, from a simplistic point of view, then that stock is definitely going to move from one entity, the sole trader is going to move from there into your limited company. And you'd probably see this as a director's loan transaction, whereas you probably wouldn't be looking to bring the cash from one thing to another, unless you've got the cash to do it. But in most circumstances, you're wanting to bring that in as a director's loan account from one to another. But yeah, it's all allowable, or not allowable, but it is all going to be form part of a business expense. So you are able to bring that in. At the end of the day, you're going to be selling that stock as your limited company, so you need to account for it in the first place. So bring it in. Only other thing to be probably mindful of is technically you should be doing this at what's called arm's length. So try and make sure that it is whatever market value is available to make sure you don't get any trouble from HMRC. But yeah, I mean, the chances of them being able to go into any grade detail would be slim. So yeah, just to protect yourself going forward.
Brilliant. There we go. Live questions asked and answered on Ask the Accountant. It's all in the name.
Yeah, it's a pity one under 30 seconds, but next time we'll get there.
Yeah, well, we've not exactly edited those to be under 30 seconds yet, either, have we? So
I don't think anyone noticed, did they?
Cool. So we have got about 10 minutes left. As I said, we didn't get any feedback on our feedback forms or any questions last week. So if you are watching this live, the link is in the comments. If you are listening back to this on your podcast choices, then please do rate us on your podcast services, leave us some comments and reviews, and there'll be a link in the description of the podcast for you to leave feedback and questions for us as well. It's already proven invaluable. We've been held to account on a couple of things where we've been corrected, where we've been slightly not wrong, but we weren't right, as a politician would say.
Really important.
We've had some great feedback. We've made some adjustments because of the feedback. So yeah, fantastic to have that. And we want to make the show better for you guys, our listeners. So please make sure you do feedback and share your experiences and share us on your social medias, and how good a start to a Monday morning this is by watching this live, or to a Wednesday when you're out walking your dog with your podcast tuned in. We have got a couple of questions that are hanging over from last week, which we didn't have a chance to answer. So, Aaron, first question. How do you cope with stress?
What stress? I mean, do you get stress in this job? No, it's a very serious question, and it is something that that is definitely prevalent in the accounting world. You may be able to remember the actual stats and figures, but what is it? Is only dentists and doctors that are above accountants in terms of more stressful professions. And the last time they did a survey of them, and you can understand why. Like in our profession, we are accountable for a lot of our clients and how they, for making sure they hit the deadlines, making sure that they get the right advice, making sure that everything's all accounted for, because the wrong advice could ultimately cost them some massive amount of cash that could go out their way. So we are inherently we are in a very stressful environment. But I think from our point of view, it is utilizing software. We've already brought it up quite a lot in this particular podcast. It's quite apt that we're bringing it up in this one. So software has become the best form of opportunity for us to be able to take away some of the mundane tasks and just be able to make it so that we can, have an opportunity to have a much more streamlined accountancy practice. And I think without that, if we were going back to the more old style way of doing it, then we would have much higher appetite for that stress level. And I think just having that opportunity to build your practice around processes that are designed to be able to be as automated as possible, and having the opportunity to look at processes and try and find ways that pain points are difficult for you is really good. And it's good for your stress levels, but also it gives you an opportunity to take those skills and transfer them to other clients as well. So it's never a wasted opportunity. So that's how we've always dealt with it. It's all about, if we are coming to, tight deadlines, or we are giving ourselves some extra work that we probably shouldn't have. It's about, well, let's try and learn from that. Let's try and accept that there must be a better way out there, either by listening to podcasts or talking to your peers or going to trade shows or whatever it's going to be. Most of the time you can find some sort of solution out there that's going to make things easier for you. So yeah, we've always been very much a case of, let's look at whatever process is causing us that issue and try and map that out and try and find out ways to make it better. We've tried as much as possible to make our practice very much process driven. And I think that gives us a chance to pinpoint where those stress levels are and hopefully figure it out. But as Paul says here, getting to the QuickBooks stress balls is also going to be by far the best way of keeping that done. What about you, Johann? Is it, because obviously we spoke about marathons back in the day, but on the first one, obviously running a marathon must be a good way of, no, it wasn't running a marathon, was it?
No. I think we all handle stress and have different tolerances to stress, and we see stress as in different ways each. My wife often says that the amount of stress I put myself under, she wouldn't be able to do. But for me, I don't feel it's stressful. For me, it's me keeping on top of my game, and I like to be at the point of the charge, as it were. So, yeah, I mean, what I do is I make sure I've got time to do the bits that I want to do. So, I'm out of the office this week at conferences. I'm out of the office in a couple of weeks at a conference. They're the bits I really enjoy. Now, I wouldn't be able to do that if I didn't have a fantastic team around me. I wouldn't be able to commit an hour and a bit every Monday morning to a podcast if I didn't have a fantastic team around me. They are filtering out some of the more mundane stuff that I don't need to worry about. But yeah, I mean, don't get me wrong. There are nights when I sit there and I cannot sleep to save my life, and I end up putting a podcast on or audio book and falling asleep to that, just to stop my mind from thinking. So that's when I know, okay, my stress levels are getting up because I can't sleep properly, or I can sleep once I'm asleep, but I can't switch my mind off. There's too much going on in my head. So for me, YouTube, podcast, or audiobook normally numbs my mind, focuses it so much on that I fall asleep quite easily after that. But yeah, personally, I think I'd be a bit bored if my workload wasn't overloaded. Like, I always get comments of, I don't know how you do so many things at the same time and stuff. So I've just got a bit of a natural tendency to be that way. Whereas me sitting at home doing nothing would drive me absolutely up the wall. For other people, that's complete chill out time. They're quite happy. So yeah, I think ultimately it's finding what works for you. And if having a QuickBooks stress ball on your desk to squeeze occasionally helps, then fantastic. Some people will go for a walk. Other people will go and just have a coffee. It's just working out what works for you. And I'm quite lucky to be able to say that I can spot my stress levels. I'm fairly self-aware and I know how to resolve it. And yeah, so I don't mind the stress levels being high. I thrive off that to a certain degree. I have got a team that can spot when I'm getting stressed, and they do check in and make sure I'm all right in the same way I check in and make sure they're all right when I know they're getting a bit stressed. So yeah, have a good team around you, a good supportive network, and have opportunities that you enjoy doing things in. So I love starting my Monday mornings with a podcast. Normally I was starting with emails and thinking, Christ, what week have we got in store? I love getting out of the office and going and doing conferences and sessions and stuff like that. So yeah, it's just finding what you enjoy and focusing on that.
Yeah, couldn't agree more. And, both of us as well, you've got football, you've got Formula One, you've got the opportunity to, watch a good movie or something, and those are important as well, aren't they? Just to switch off, and you get those opportunities to do that, and maybe go see Peter Kay or something like that could be quite useful as well.
I heard a man's got some tickets.
So it could be rewarding is not the right word, but having the opportunity to have those times when you can just turn everything off is so important. But again, you're right. The only reason that we're able to be in those positions is because we've got a great team that can give us that flexibility to be able to just turn off for an afternoon or whatever it's going to be. So yeah, very, very, very important to kind of have those opportunities to bring in.
Definitely. Well, that does bring us up to the hour mark, Aaron. So I think we'll leave it there for today. Next week's show is going to be an interesting one. We'll discuss all things budget. And yeah, we'll follow up on our trips to London. But anything you want to plug for the week ahead, Aaron?
This one is just keep those beady little eyes open for whenever we do get to release this QuickBooks. Ask the accountant. We have cool friends. Because we've got a great QuickBooks expert coming in. As the brief was, that we find someone who's brilliant at QuickBooks to help us build those relationships. So yeah, looking forward to bringing that. But we're really excited about it. I think it's going to be the start of something quite big for this particular enterprise, and I think it's definitely something to keep an eye out for. And yeah, we're looking forward to getting that released so that people can enjoy the content.
Brilliant. Yeah, I'm really looking forward to recording that tomorrow. So yeah, if anyone is going to be at the business show in Excel, then please pop by the QuickBooks stand and have a chat with me. If you want to be as kind as to bring me a coffee, then that'd be wonderful, because I don't know how often I'm going to escape to get a coffee.
It's not the Sage coffee again, though, is it?
I'll bring my own cup.
Okay, that's fine.
Yeah, bring my own cup so it's not in a Sage cup. Brilliant marketing part from them, though.
Very, very, very clever. Very clever.
So yeah, that's it from me, basically. Obviously, guys, keep reviewing us, keep rating us, keep sending your feedback in, or any questions. We love being kept honest and true. The fact that we get live questions during this show to help prove that it's live is phenomenal. So yeah, please keep going with all of that. And if there's nothing else, Aaron, that's it from me.
And that's it from me. Goodbye, everyone.
Goodbye, guys.
Have a great week.